Amazon is down to $96 a share in the pre-market. It's been absolutely hammered, and the reason for this is they've just released their third quarter results. A combination between slowing in the growth of the company and weak guidance for the coming quarters has caused the stock price to drop down 13% in the pre-market, $96 a share. And if we take this stock over the last 5 years, it's pretty much wiped out all of the post-COVID gains. It even got up, it basically doubled in that time, and is now going back down again. So we're basically going back to April of 2020. So what I'm going to be doing is going through these numbers, talking about what's happened with the stock price, then taking this to my discounted free cash flow model and Buffett Graham intrinsic value models to see if the stock is a buy or a sell. Now, what we're going to be doing is putting in the most recent numbers here. We've got the last 3 years of all the values, but then taking the numbers directly from the financials. So let's just talk about some of the updates here. You can see net sales has increased 15%. 127 billion compared to 110. Operating income did decline 2.5 billion compared to almost 5, and net income has decreased as well. 28 cents earnings per share compared with the 3.2 or 31 in cents a share in the third quarter of 21. Operating cash flow down, free cash flow down. Everything's down basically for what they expected, and they got hammered accordingly. If we do have a look at the guidance here, you can see the financial guidance. They're expecting net sales to be 140 to 148 billion, which does sound good, but if we compare to what analysts were expecting in that time, analysts are expecting for the current quarter, which is December 22, of 155 billion. So they're way below what analysts are expecting. Right, so that's just a quick little summary there. Let's get into the numbers. So firstly, we want to look at the income statements and what has happened with the income. Well, we know it's 127 billion, so let me just add that into the sheet right now. 127,101 billion, and this is split between the net product sales and the service sales. Service obviously being AWS, and the net product is their Amazon business. Amazon business is up to 59 billion here, but the service is up 8 billion. So overall, that is what's driving it. AWS is overtaking them, and overtaking them then some. Next, we want to have a look. Actually, just before we do that, this is the revenue summaries for the last 4 years: 280, 386, 469, and then slowing dramatically to 502 billion. So yes, it is growing still, but they are slowing. And with the next quarter coming up, which is Christmas, that is where they get a lot of their sales on the actual product sales center side of their business. But they are expecting slowing growth there as well. Now we want to have a look at the net income, and this is where we're seeing decrease as well, 2.8 billion. So let's just add that into the sheet there. That is I can't remember the number, 2872 billion. And that means in the trailing 12 months, 11 billion in profit, massively down. In fact, the lowest number it's been in the last 4 years. So that is another reason why the stock has taken a bit of a beating. If you even look in the trailing, this is the last 9 months here, minus 3 billion compared to 19 in the previous year. So things are decreasing. If we look at the earnings per share is down as well. Negative obviously in the trailing 9 months, but 28 cents a share. Now Amazon are actually issuing more shares here. You can see they had 10.132 billion, and now it's down to 10.191 billion. So that is a bit of a negative, as they're diluting shareholders, not massively, but it has worked out quite well for them because they were issuing shares previously when the stock price was up, and now it's down. So as long as they're using that money to reinvest, then it's not the end of the world. Next, we want to have a look at the we can see here actually net sales of AWS. You can see that's almost 20 billion in 2022, and you can see everything else is up, but they have once again operating loss on the net sales of America. Now this is just the Amazon business, and operating loss on the international sales. AWS is this company. So why is the guidance for the fourth quarter down when AWS is the main thing? Pretty much need to get rid of their Amazon stuff and just go AWS, but that's obviously a bit of a crazy idea. So next we want to have a look at the cash flow statements and see how much free cash flow Amazon are generating. Now we did see that at the start, but let's just go have a look at the actual cash flow statements here. Cash flow operating activities, we have 22 here, so it is up 11,404. So let's just add this into the sheet. This is 11,404. And then we have the CapEx, which is what they're spending, and purchase of property equipment is up 16.378. 123, and that gives us a free cash flow of around about 27 million. So it is increasing. That's not right. Because it's a minus number. Sorry about that. 27 million. Minus 5 billion. That's more like it. I was going, well, that's excellent. Why would they do that? Sorry, that's me putting the numbers in incorrectly. Minus 5 billion, which gives a trailing 12 months of minus 26 billion. Look at the free cash flow Amazon was generating. 38, 66, 46, now minus 26. So if we take this to the discounted free cash flow model, I imagine this is not going to like the stock too much. Now, this is based on averages, so we'll see what it generates initially. $81 a share. Now, this is based on averages. So let's see, have a look at these and see what this is. So in terms of the first thing we want to look at is revenue. Revenue is still 13%. This is based on estimates, and I'm sure analysts will reevaluate these estimates, but it's saying slowing revenue growth. So let's go a bit of a bearish case here. Let's take it down to 6%. Now, this is still growing revenue, yes. That brings the stock down to $72 a share. Wow, Amazon is getting hammered here. Next, we want to look at the margins. Margins are wafer thin on Amazon, and I think this is going to be decreasing again, but we'll just take an average of these three numbers here, and that gives us about 39, so 3.9. Once again, stock's lowering $60 a share, madness. Then we have finally the net income to free cash flow. Now, free cash flow is negative, so this is a bit of an outlier here. Normally, they would not be negative. They've been a pretty solid free cash flow generator, so I'm not going to touch this. But that brings the stock to $60 a share, which is an absolute madness. Amazon has been pretty consistently a buy as per the models, but you can see that a couple of bad quarters, things change very, very quickly. And as we've seen, the market has reacted to it. So to get it down to $60 a share, if we go for the last... Basically, this would take us back to 2018, which is a long, long time ago. But the stock has been absolutely hammered. From its peak, it is down almost 40%, and obviously a bit more because this is not taking us to the pre-market. So it's actually down probably closer to 45, 50. Next, we want to have a look at the Buffett-Graham intrinsic value models. It takes earnings per share, expected growth rate, and then the AAA bond yield. Now, this expected growth rate in Amazon is 26% over the next 5 years. Now, this number may be revised again. Analysts, do they know what they're talking about? Where you can see the price targets for Amazon. It's 110 here. Yahoo Finance hasn't updated. It's 96. So it is lower than all of the price targets. They're expecting $100 a share minimum, average of 170 in 12 months, and currently Amazon is below that. So really, what do these analysts know? So I imagine this number is going to get revised, but let's just see what it is right now. This gives a Buffett-Graham intrinsic value of $64 a share, and that is with a higher expected growth rate. Let's just knock that down to 15%, 41. So this, you can see that this stock is getting absolutely hammered at the minute. Both models say stay away. Crazy times in the market. I'll probably be doing a video on Apple potentially later today. But yeah, hopefully you guys enjoyed it. Please like and subscribe if you're not already, and I'll catch you guys next time.